Hello folks, stocks were mixed on Friday as investors reacted to new commentary from Jerome Powell. Amid the earnings reports, stocks dropped during after-hours trading due to the prospect of Fed tapering purchases. The Dow Jones Industrial Average reached a new high, beating its previous record close from August 16. The S&P 500 retreated after setting a fresh intraday high. The Fed is coming close to ending quantitative easing and reducing the $4.5 trillion in debt it bought after the crisis. The central bank has been on track to wind down QE by late next year, according to Powell this week during a virtual event hosted by Treasury Secretary Steve Mnuchin. The Fed has repeatedly hinted that the economy is approaching the threshold that would justify decreasing emergency asset purchases. Powell also predicted that inflation in the U.S. will last longer than we had originally anticipated, and will last until at least next year. The Nasdaq lagged behind following two disappointing call reports from leading technology companies. On Wednesday, Snap shares tumbled by more than 27% after the company posted lower than expected revenue numbers. The company is also forecasting weaker average revenue per user for the fourth quarter, likely due to Apple's update limiting third-party apps' access to contact data. The share market is down because of this, with some companies like Facebook and Alphabet taking a hit. Shares of Intel, INTC, also dropped after the company said margins would be under pressure for the next up to 3 years, in part reflecting challenges from global materials shortages. Though Chipotle's share prices experienced some volatility due to the company's quarterly same-store sales, it should be noted that Chipotle flagged widespread staffing shortages as a major impediment for the quarter. The S&P 500 and Dow Jones are continuing to reach new highs, despite some recent mixed results. Despite the bad press, these companies have just continued to perform well. The economy is strong, and that's something you can take advantage of. Both measures have helped to overcome concerns in a market with slowing growth after reopening activity in the beginning of the year. New labor market data showed weekly jobless claims dropping to their lowest level for March 2020 last week. The layoffs and other involuntary separations continue to slow down in the labor market. National home prices are still climbing, and recent figures show that demand is still strong. Home sales rose for the first time since September 2020, showing more people are buying property than letting it sit on the market. Based on their latest quarterly results, many companies have been able to increase their profits in the face of increasing input and labor costs as well as supply chain challenges. Investors are hoping for more reassurance on the solid trends seen so far in corporate profits next week, with a strong set of third-quarter earnings results due for release. The index components, like Apple, Amazon and Facebook, are expected to report their quarterly earnings next week. Dow Jones, S&P 500 and Nasdaq futures will be opening Sunday night. The stock market rally was strong this week, with the Dow Jones and S&P 500 reaching all-time highs. The Nasdaq Composite moved closer to record levels despite rising Treasury yields and Friday's big sell-offs by Intel and Snap. Next week's earnings season, many companies will be releasing reports. It's a busy time for any company to release their numbers, but it also provides an opportunity to see how close they are to meeting expectations. There will be Apple, AAPL, Microsoft, MSFT, Advanced Micro Devices, AMD, General Motors, GM, Upwork, UPWK, ServiceNow, NOW, and Google parent Alphabet, GOOGL, are 7 big names on tap that are in or near buy zones. These stocks, like Snap or Facebook for instance, can make or break other industries and stocks alike. Just ask Google and Snap, who've both seen their own and others' stocks soar. Tesla raced to a new all-time high as the profitability story that analysts and investors have been waiting for finally took hold. Tesla stocks hit a new intraday high of $903.03 yesterday, and has since settled back, but some analysts think it's again due to the fact that Tesla's earnings largely impressed in regards to margins and China sales. Tesla is now worth nearly $902 billion, according to the latest relevant statistics. The EV sector is having a bad day, and although some Chinese companies like Li Auto, XPeng and NIO are holding their own, Faraday Future Intelligent Electric is outperforming. Tesla has really passed the profitability test in comparison to other car companies. It's worth an A+ when you compare its metrics. I'm going to talk about Tesla's earning that made this stock hit all-time high. Tesla reported revenue of $13.8 billion on Wednesday after record earnings. They increased revenue by 57% year-over-year, and adjusted earnings per share rose 145%. These results compare favorably to analysts' consensus forecasts for revenue and adjusted earnings per share of $13.6 billion and $1.59. Respectively. Companies' increased sales and robust financial standing despite the difficult operating environment show their remarkable progress. Tesla CFO Zach Kirkhorn said, "A variety of challenges, including semiconductor shortages, congestion at ports and rolling blackouts, have been impacting our ability to keep factories running at full speed. We believe our supply chain, engineering and production teams have been dealing with these global challenges with ingenuity, agility and flexibility that is unparalleled in the automotive industry." Tesla didn't share much information about Q4 deliveries, but they are still on pace to increase their total deliveries this year by more than 50% over 2020. Tesla's management said in the company's third-quarter earnings call that Tesla exited Q3 at an annualized production run rate of more than 1 million vehicles. Zach Kirkhorn added that the increase in production rate has primarily been driven by further ramping up of Model 3. Thank you for following.